Hello traders and welcome to Market Update. It's Stu Naupan here, founder of Master the Markets, Elite Trades Conference and the Traders Open Day. So today here we are on the markets, on our market update on the 4th of June 2021. Can you believe it? It's already the 6-month half of the year we are in already. How's the year going for you? So you see, you have to reflect, you have to also review your place where you wanted to get towards this year and where you're at, and then look to continuously fill the gap. So on today's topic, in helping you fill the gap towards your trading goals, what we're going to be looking at is phases. Okay, we're going to look at phases of cycles and also how to correlate them to higher time frames. So very interesting indeed. Now, if you have any questions at all regarding any of this topic that we are going to cover for today, or any of our other trader coaches who present market update, if you have any questions at all, or if you have any strategies that you are doing and you're struggling to achieve consistency, you can always book a session with our coaches. You can take our trader personality test during the session, which is a 45-minute session, to find out what strategies really fit you. Gain a free video course that fits with your personality as well, and then finally trade live with us and learn strategies that take just 15 minutes per day, which is basically end of day strategies where you set and forget. Okay, so all of that great value for you on the 45-minute session. Now let's swiftly move on to today's topic. So let me take a look at from here. So let me just annotate and let's move it on forward. Phases is what we are looking at. So what are phases, traders? So some of you may ask, so what is it? So what are phases basically? If you look at price never moves in a straight line, right? So that's market principle number 1. So if it does not move in a straight line, it moves in cycles. Now you see, interesting, when it moves in cycles, it creates turning points, right? Tops and bottoms. Now between the tops and bottoms, or the bottom to top here, it creates two moves overall. Okay, either a top to bottom move, which is going further down like that, or it creates a bottom to top move going up like this. Okay, so in that instance, if you can see in this bottom to top or top to bottom, when you combine that with a trend, let's say for example in here in Brent oil, that's uptrend, then what we say that this bottom to top move is in line with the trend because it's going up, isn't it, traders? So up with the uptrend is what we call as phase 1. And then the one that goes against it, so in the top to bottom is a downward move, right? So a downward move in line with a trend in an uptrend is against it, isn't it? That's what we call phase 2. So in other words, in generic terms, phase 1 is in line with the trend, and phase 2 is counter trend. Okay, so therefore if I were to invert that into a downtrend, if you take a look at here, then what will happen is this one, which is a top to bottom move, that will be called your phase 1, and then the one that goes against you will be phase 2. Most important thing though, to identify them correctly and in a reproducible way and in a quantified way, is first thing you need to do is quantify the tops and bottoms, which is what the smart money indicator does. Okay, so that you can produce valid statistics out of it. All right, so okay, that's to do with that one there. So what? Some of you may ask, okay, that's all good, I know all of that, but why use that? Why should we use that? Because you see, traders, why it's useful is if you want to create momentum based strategies, when you know the phase 1 and phase 2, which movement it's in, then you can then correctly identify the momentum and trade only on phase 1 moves if you choose to in terms of your strategies. Or the only time when you would take a phase 2 move is if you're going to align it with a higher time frame momentum or towards a turning point towards in a higher time frame. for it then to be in alignment with phase 1. So that's why correctly identifying them will help you. And also if you want to create reversion strategies as well, all this can help you, because then you'll be concentrating mainly on phase 2 moves or capturing turning points, big reversal points in the market. Now, some of you may ask, okay, that's good. I understand why to correlate on higher time frames, but how would I do that? Okay, how would you do that? That's why I told you in the earlier part that we will look at time frame correlation as well. So if you actually think about it, traders, if you were to correlate to a higher time frame, usually, you see, when you think about time frame correlation, if you just think about uptrend or downtrend between a daily and a weekly, or a 1 hour and a 4 hour, how many combinations can you get? Yes, some of you who are experts in combinations and permutations will say there are 4, correct? Now, however, if I were to do a phase 1 into it, UTP1, uptrend phase 1, and let's say over here we have UTP2 on the weekly. So in this kind of combinations, how many combinations can I get? Some of you are very quick enough, and you can work out the maths later. In Trader's Toolbox, we go through this as well. There are altogether 16 correlations altogether. Okay, 16 correlations. So you have, that's why I'm telling you, this is very important in understanding whether it's phase 1, phase 2, and how it's correlating to a higher time frame. So out of the 16 permutations, rather than trading all of them, you can decide just to formulate a strategy just to tackle maybe 2 or 3 of those permutations. Then you do another strategy that tackles the other permutations. This is one of the reasons why traders start to get some profits but then lose back the profits back to the market, because some other higher time frame is blocking the price movement, and that's why you're not getting their movement forward to make their money. Okay, so in terms of the 16 permutations, the first one I would say, to really keep it simple, take ones which are in relation with phase 1 on the daily and the weekly. Okay, that's how I would do it. So for example, if I were to show you an example here, so let's see on the Brent oil right now, you see it's uptrend, bottom to top move, so that's a phase 1. Okay, so if I were to look at the weekly now, you can see it's very straightforward. It's also a phase 1 move. So we're good to go. Alignment. So we move forward with that. Okay. So I would say, first of all, if you want to design strategies like that, just stick to that one there. And sometimes if you have, even though on a daily, it might be a downtrend phase 2. Okay. Downtrend phase 2 on the daily. But however, on the weekly, it's something like this. It's a phase 1 on the weekly. Then you can take it in alignment because both of them are showing upward move, right? So that's the things that you just got to be aware of when you are trading these strategies, and how you want to momentum correlate to a higher time frame as well. This is what we do on TSL primary, and we take momentum correlation trades. Okay, good. So I think that's that on the topic. So what did we cover so far? We looked at what are phases. We looked at why should we know them, and why is it important? Because for the strategies that we're going to construct, especially if you want to do momentum or reversion. And then finally, how to trade them is where you basically construct your strategies, which I gave you some examples. Just take 2 of them and just create one strategy on that, which is just correlating on lower and higher time frame, daily or weekly, or 4 or 1 hour. Or you can also look at turning point capture. Okay, all this we also go through in Traders Basecamp package and our Traders Toolbox workshops as well. And for those of you who got any questions on this, as I mentioned, you can always go and book a free 45-minute session over here where we'll do your trader personality test, give you a free video course that suits your personality, and also trade live with you as well. Okay, and also if you want notifications of our videos as they come out, as they give really good amount of value, you go ahead and hit the subscribe button. and you can get the notifications whenever we do videos. Now we swiftly move forward to our market update. Dollar Swiss on the hand over here. As you can see, we just had a confirmation over here on this bar. So what we'll be doing basically on this open equity to the upside, so therefore more looking towards the long. Dollar yen on the other hand, what we are looking at over here, open equity is a bit diminishing, so we will be trailing our stop losses on a MS1 structure. GBP USD on the other hand, as you can see, top to bottom move over here, so open equity more to the downside. Euro dollar on the other hand, more open equity to the downside as well is what we are looking at. So this on a 1-day exit on a cash in 4.0, we just exited it on a short target over there. Aussie dollar on the other hand over here, again more open equity to the downside as well is what we are looking at. GBP yen, yes, open equity diminishing to the top side, so looking for more shorts if you're long on it, more aggressive stops on this as well. Bitcoin on the other hand, more open equity to the upside, it is diminishing to the downside, so if you were to trade this on the short, I will be getting tighter on my stops. Brent oil, yes, open equity diminishing to the downside as well, so we will be doing an MS1 trail over here behind the low of each bar. Gold on the other hand, you can see over here more open equity to the downside as well. FTSE, of course, more open equity to the downside. The high is almost reaching, but if you're long on it, more tighter stops on there on the low of each bar. Dow Jones on the other hand, as you can see, it is still losing its momentum. I would say more aggressive stops if you're long on it, and open equity is diminishing to the upside. S&P, similar story over there, more open equity to the downside as it just confirmed its top yesterday. And then silver on the other hand, more open equity, I would still say to the downside. Top is probably due, but if you're to still trade it long, then more tighter stop on the low of every bar. Grains, wheat, on the other hand, I would say more open equity to the upside as of now. Okay, traders, I guess that's pretty much that from me on the market update. In terms of our performance, let's take a look what we have. On the 4th of June, Elite Room, pretty quiet, only 100 pips, 0.27 of a loss, small loss over there. In terms of our live trading room, in terms of the momentum, strategies, we did take a bit of a hit because of the choppy nature of the currencies mainly contributing to the losses, but we still got some really good runners on dollar yen and Brent oil, still yet to be closed. But however, for this week, 20% OE is minus 1.74, 70% OE minus 0.34. TSL primary took a little bit of hit, but it's still running on really some good open positions on Brent oil and dollar yen as well. Minus 2% over there, and 70% OE elite, which is what we are doing at the moment as well towards the live trading room, which we haven't closed out the positions for this week, but overall that's minus 1.1, and then we got total of 5.18, minus 5.18, and then if you total that up, minus 5.45%. Once we get the good runs, all these losses will be overridden. So always know your drawdowns and always know how your strategy combination works towards your eventual positive equity curve. Okay. All right. I guess that's pretty much that from me. Just quick reminders, subscribe to the YouTube channel for all our updates and our notifications, and also coaching session where we can see you live and serve you in taking a trading personality test and then to tailor the strategies towards your personality. That's all from me for now, and as we say till the next time, stay disciplined, follow your trading plan, and keep trading like a master.